What's up, guys? This is Crypto with James talking to you today about some of the crypto news. The outflows have increased and the volume is massively down. This is something that's common in a bear cycle, but it is also, and bear cycle, remember, when the markets are down, but it's also indicative of potentially greater decline to come. So if you want to know about this, keep watching. Before I get into that, I update the spreadsheet. These are the first 26 coins that I spoke about on the channel. These were the prices at recording, and these are the current prices. Had you invested $100 into each of these and were still holding all that crypto, you'd be in profit for around 10k. If, however, you had cashed out of those cryptos during the bull cycle when the markets were flying high, you would have been in profit for 123k. Crazy difference from 2.6k investment. And Phantom is at the top of that list. That is no coincidence. I did a whole Udemy course for $20, talking about how good Phantom was. The fact that I believed it would 100x, and it went on to do 677x. If you had done $1,000 into Phantom and cashed out at the right time, you would have been in profit enough to buy a bloody good house. And now, if you want to see the coins that I'm going to be buying up in this bear cycle, the ones that I think are going to have the massive gains, the 20x's, the 40x's, the 50, the 100. And come check out Copy My Crypto. The link's in the description. Go read the site. Everything's verifiable because it's all on the bloody YouTube channel. And if it resonates with you guys, I look forward to seeing you there. Right. So, summer doldrums. Kind of like that. So crypto volumes are down 55% according to CoinShares. So this is the data from CoinShares, which is showing the weekly crypto asset flows. Miner outflows totaling $9 million. Market volumes remain very low. And what you'll see here is, the week number and the outflows or the inflows. So what we can see is week 26 of the year had massive outflows. Whereas right now we're sitting on about 9 million in terms of outflows, which isn't awful, but it's an interesting situation to be in. So look, outflows from digital asset investment products totaled about 8.7 million in the week ending Sunday. CoinShares reported this on yesterday. Bitcoin investment products saw a third consecutive week of outflows, totaling 15.3 million. Funds with direct exposure to Solana also registered minor outflows, totaling 1.4 million. Meanwhile, Ethereum and multi-asset investment products registered small weekly outflows of 2.9 and 2.7 million respectively. Overall, crypto investment products registered 1 billion in weekly volumes, but that is 55% below the yearly average. So CoinShares said that most of the negative sentiment has been centered around Bitcoin, which tumbled last week after facing a stern rejection at 25k. Bitcoin is currently sitting at around 21k, which is below its realized price, or the average price at which Bitcoin's circulating supply was last purchased. Crypto has a strong correlation with traditional equities, which leaves the asset class exposed to further volatility ahead of the Federal Reserve's annual Jackson Hole Summit in Wyoming, which is later this week. And option traders see little cause for concern. However, Fed Chair could reinforce the central bank's policy for the fall when he delivers his Jackson Hole address on Friday. And to be fair, I'll expand on the Jackson Hole situation as well. So large institutions offloaded about $5.5 billion worth of Bitcoin between May and July, mostly as a result of forced selling, according to Arcane Research. Institutional investors appear to be hanging out on the sidelines due to the market volatility, a rocky macro backdrop, and the uncertainty on the regularity front, which is piss poor, as it has been for a while in America. So there's a few things to evaluate in terms of the Jackson Hole. So obviously the Fed officials together with banking figures from around the world, will meet for the annual Jackson Hole Symposium. That happens as of Thursday, and we'll see that the speech from Jerome Powell on Friday. So this year's gathering comes at a critical time for markets in the US and further afield. Inflation under the Fed's jurisdiction appears to have begun cooling, while elsewhere the opposite remains true. Particularly in the UK, they're predicting inflation might hit 18% in the UK next year. But the latest data is still weeks away, and that might not stop the Fed from giving strong hints as to how the Fed Jerome Powell, how the Fed are going to react. With that in mind, volatility could easily pick up both before and during the event, making Jackson Hole a key item to watch on traders' radar. I've said this before, like watching those conferences and watching a minute-to-minute chart is fantastic. It teaches you a lot about overall sentiment, particularly the reactions to particular statements within the overall conference that is done. So there's a few things that are being looked at. Now, they could shift to go to a 50-point hike rather than 75-point hike. That seems to be the overall consensus for most people at the moment. Bank of America said that it would continue to look for 50 basis rate hikes in September and November, plus an additional 25 rate hike in December. That's Bank of America's belief on what the Fed are going to do. But there's a few ways this can go. But Bitcoin could be in for an ugly 6 months. Bitcoin managed to stave off major volatility over the weekend, but still saw a new low for August as low volume weekend trading conditions accentuated market moves. We saw a big drawdown on the Friday, and Bitcoin spent the subsequent days sort of eking out a low in an overall consolidation pattern. The low came in the form of a trip down to 20,770 on Bitstamp, with Bitcoin then adding 1,000 before returning to a trade approximately in the middle of the two values, which is currently where it's at. The weekly close at 21.5k was troublesome, marking the lowest since the week of July 18th. After last week's candle cost bulls almost 11.6%. So with fear of new low palpable among commentators, others argued that the conditions were not unequivocally pointing to further misery. The reality is many people believed for a while that Bitcoin was about to rally and it was going to go off to the races. Many people are now suggesting that lower lows are going to come in. The question is what do we see? And we're getting variations of it, but Brian Beamish, who's the founder of educational suite The Rational Trader, said the next 12 to 19 weeks are going to be ugly. Once done, the floor for this cycle ought to be in, but then we shall start it all over again. And fundamentally, this is the reality. Like, one thing that people need to be aware of is historically September has been unequivocally the shittest month for Bitcoin throughout its entire lifespan. I think 9 of the last 11 Septembers have had red months, like red candle months. And one of the green candle ones was literally, I think, the very first candle, the very first September of Bitcoin's life. So you almost can negate that as well. So it's going to be very, very interesting to see how the rest of this week plays out. But fundamentally, we're about a week away from September, and exchange balances are at an all-time low, which normally is a good sign. The fact that exchange users have removed 30,000 Bitcoin from their accounts, as in taken it off the accounts, that's usually a good sign. The question is does it continue? I think it's unlikely that we're going to see another price appreciation run. September's always pretty awful. And Crypto Fear and Greed Index, which uses a basket of factors, currently is extreme fear, or a step away from extreme fear. And it's dropped around 40% in terms of from where it was a meager week ago. So we're in for a really interesting week. But fundamentally, the one thing people need to remember is when the markets are down, that is brilliant. As long as you've got the long-term view. BitBoy said it as well. Bitcoin heading back below 20k. I agree. No, what people need to remember is, look, if you've got the long-term view of crypto and you know that the markets are cyclical, we're going to have another bull cycle, whether it's, starting in the back end of 2024 or possibly sooner. What you know is that every market in the history of all markets has had new all-time highs. And when everything is down, while it's the scariest time to buy, it's the best time to buy. People always need to remember that, put things into context with a wider and longer view. And if you've got a longer view, you will love these moments because there are opportunities to buy cryptos at discounts. That's what you got to think. But here's the question for you guys today. What do you think is going to come at the end of this week? Are we going to see ground regained when Jerome Powell does his speech? Or are we going to see the overall market sentiment drop? Are we going to see crypto crash? Are we going to see traditional markets crash? Because whilst things are good in America, or not good, but things are improving month on month lately. It's pretty bad the rest of the world. Inflation is, like I said, forecast for 18% in the UK as early as the beginning of next year. So even with things improving in America, well, certainly the inflation data improving most recently, what do you think is going to happen at the end of this week? We're going to have a real solid rally on Friday, or are we going to get wrecked? The market going to crash? Let me know in the comments down below. And guys, if you want to see the coins I buy up in the bear cycle, the ones I think are beauties, the ones I think are going to do 20x's, 40x's, 50, 100, then come check out Copy My Crypto. The link for the site is in the description. Go read it. If it resonates with you, come join me. Remember, everything on there you can check. It's all on bloody YouTube, so you can go and check everything out. And if it resonates with you, I look forward to seeing you there, folks. And that's it from me. Take it easy. Bye-bye.